Hey there, crypto enthusiasts. Today, we're diving into Polygon MATIC, a popular altcoin that's making waves as a layer to scaling solution for Ethereum. If you're thinking about investing in 2025, I've got you covered with a detailed breakdown. Let's keep it simple and friendly, like chatting over coffee. Polygon is all about making Ethereum faster and cheaper. It can handle up to 65,000 transactions per second, and gas fees are usually just a few cents, though they can spike during busy times. It's secure, with regular audits. But there was a hack in 2021 where 801,601 MATIC tokens were stolen. Don't worry, they fixed it fast. It uses proof of stake, which is energy efficient, and stands out with its multiple scaling options like plasma and rollups. Team and development team behind Polygon is top-notch. Founders like Jaynti Kanani and Sandeep Nailwal have deep roots in blockchain, with past work on Ethereum projects. They're active to check their GitHub for constant updates, and they're on track with their roadmap, including a big transition to Pol market and adoption. You can buy MATIC on big exchanges like Binance and Coinbase. It trades around $5.49 million daily, with a market cap of $586 million, and has room to grow since it's only 18.9% of its fully diluted value. It's used in DeFi, ENTs, and gaming, with partners like Meta and Aave, and thousands of apps built on it. Tokenomics and community staking MATIC can earn you 5% to 20% APY, which is a nice bonus for holding. The token distribution is fair, with lots going to the ecosystem, not just VCs. The community is lively on social media, but there's a heads up: the SEC is looking at MATIC as a potential security, which could shake things up. Investment tips for 2025 for 2025. I'd say go for a long-term hold, maybe stake for extra income, and spread your risk by diversifying. Keep an eye on regulations, and use dollar cost averaging to smooth out price swings. It's a solid pick, but stay informed. What's surprising, what caught my eye is how low the gas fees usually are, sometimes just 0.2 cents for a simple transaction, making it super affordable compared to Ethereum's mainnet. Comprehensive analysis of Polygon MATIC for 2025 investment. This comprehensive evaluation of Polygon MATIC as an altcoin investment for 2025 is structured around 6 key criteria: technology, team and development, market support and liquidity, future application and adoption, tokenomics and supply model, and community and regulatory risks. Each section provides a deep dive into the factors influencing its investment potential, supported by data and analysis, culminating in investment suggestions and scores out of 100 for each criterion. Technology analysis. Polygon's technological foundation is critical for its role as a layer to scaling solution for Ethereum, addressing scalability, security, consensus, and innovation. Scalability. Polygon achieves high transaction throughput, with reports indicating up to 65,000 transactions per second on a single sidechain, far exceeding Ethereum's mainnet capacity. Gas fees are notably low, typically ranging from 0.000 to $1 for simple transactions to 0.105 for complex ones, based on a gas price of around 30-33 GUI and varying gas limits. For instance, a simple transaction with a 21,000 gas limit at 30 GUI costs approximately 0.00063 MATIC, or 0.000 to $1 at a $0.31 MATIC price, while higher gas limits, for example, 1 million at peak times, could reach $0.2, aligning with historical reports of fees around 0.105. This efficiency is facilitated by technologies like plasma, scrollups, and optimistic rollups, enhancing its layer-2 capabilities. Security is a vital aspect, with Polygon undergoing regular audits, as evidenced by services like Immunebyte specializing in Polygon smart contract audits. However, a notable incident occurred in December 2021, where a vulnerability was exploited, leading to the theft of 801,601 MATIC tokens worth $2.4 million. The team responded swiftly, fixing the issue and compensating users, with no material harm to end users reported. Skynet ranks Polygon highly, with a top 10% security score, indicating robust ongoing security measures. Consensus mechanism. Polygon employs a proof-of-stake POS consensus mechanism, specifically using more viable plasma Moriv, a variant that enhances scalability through a hierarchical structure of validators. This ensures security and decentralization while supporting high transaction volumes, as detailed in staking guides. Innovation. Polygon's unique features include its modular framework, allowing developers to create custom blockchains with ease, and its support for multiple scaling solutions. It stands out from competitors like Optimism and Starknet by offering a comprehensive ecosystem, including one-click deployment of pre-configured blockchains and interoperable messaging protocols, as noted in its documentation. Score: 85.100. Team and development evaluation. Team's experience and development activity are pivotal for Polygon's long-term success. Experience and credibility. The founding team comprises Jaynti Kanani, CEO, full-stack developer, Sandeep Nailwal, COO, blockchain programmer, Anurag Arjun, Chief Product Officer, Product Manager, and Mihailo Bielik, Software Engineer. Their credentials include significant contributions to Ethereum, such as implementing Plasma MVP and Wallet Connect, with prior roles at companies like Housing.com and Deloitte, showcasing deep industry expertise. Track record. Before Polygon, the team worked on successful Ethereum projects, enhancing its ecosystem with tools like the Dagger event notification engine. Their entrepreneurial ventures, such as Sandeep's role at Scopeweaver, further underline their track record. Active development. Polygon's GitHub activity is robust, with 94 repositories and frequent commits, indicating active development. Recent updates include the transition from MATIC to Pol and ongoing enhancements to SCEV, reflecting a commitment to innovation. Score: 91.00. Market support and liquidity assessment. Market presence and liquidity are crucial for accessibility and trading efficiency. Exchange listings. MATIC is listed on top-tier exchanges like Coinbase, Kraken, and Binance, ensuring broad accessibility. CoinGecko reports it across 50 exchanges and 103 markets, with popular pairs like MATIC or UST, enhancing liquidity. Daily trading volume and liquidity. The 24-hour trading volume is approximately $5.49 million, with a market cap of $586 million, yielding a volume to market cap ratio of 0.97%, indicating moderate liquidity. This suggests ease of trading, though not as liquid as top-tier cryptocurrencies. Based on recent data from CoinMarketCap, market cap vs fully diluted valuation (FDV), the current market cap is $586 million, with a circulating supply of 1,913,783,718 MATIC and a total supply at a current price of $0.31. The FDV is $3,100 million, meaning the market cap is 18.9% of FDV, indicating significant potential for growth as more tokens enter circulation. Score: 75.100. Future application and adoption incites the potential for real-world application and adoption drives long-term value. Real-world use cases and partnerships. Polygon supports a wide range of use cases, including DeFi, for example, Aave with over $1 billion locked, and for example, OpenSea, and gaming, with low transaction fees enhancing adoption. Partnerships with major entities like Meta, JP Morgan, and Reddit have boosted its ecosystem, as highlighted in industry analyses. Adoption rate. The adoption rate is evident from the growing number of users and businesses, with projects like eSafai and Polymarket leveraging Polygon for scalability. The developer ecosystem is thriving, with thousands of dApps built, supported by a strong community presence on social media and forums. Developer ecosystem and integrations. Polygon's SDK facilitates easy development, with integrations across various DeFi and ENF platforms, enhancing its appeal. The transition to Pol and AG layer expansion further supports developer activity, as outlined in official blogs. Score: 81.00. Tokenomics and supply model review. Tokenomics underpin the economic incentives and sustainability of the network. Inflation or deflation mechanisms. Polygon implemented EIP 1559, burning base fees, which could lead to a deflationary effect, reducing circulating supply over time. The Pol upgrade aims for a hyper-productive token model, with emissions capped at 1% annually for validator rewards and ecosystem support. Staking and rewards. Staking. MATIC offers rewards, with APYs ranging from 5% to 20%, distributed to validators and delegators. This incentivizes network participation, with 12% of the total supply initially allocated for staking rewards, as per Tokenomics reports. Token distribution. The initial distribution includes 16% for the team, 22% for the foundation, 23% for the ecosystem, 12% for network operations, 19% for launchpad sale, 4% for private sale, and 4% for advisors, ensuring a balanced allocation to support growth and development. Score 85-100 Community and regulatory risks. Analysis. Community engagement and regulatory landscape impact long-term viability. Strength and engagement of the community. Polygon boasts a large, active community, with significant engagement on social media and forums, supported by events like hackathons and conferences. The developer community is particularly strong, with numerous projects built on the network. Regulatory concerns. Regulatory risks include potential SEC scrutiny, with claims of MATIC being classified as a security, though Polygon Labs has responded, asserting development outside the US. This uncertainty could affect market perception, as noted in regulatory updates. Network decentralization. The POS mechanism ensures decentralization, with over 100 validator nodes and more than 14,300 delegators, distributing staking power. While specific distribution data is limited, the broad participation suggests a reasonably decentralized network, mitigating control by a few entities. Score 75/100.